Welcome to Markets Now. I'm Michelle Rook with DuWayne, Bosse of Bolt Marketing, and we saw kind of a mixed day in the livestock futures, the grain trades. I'll call it steady to higher across the board. All right, DuWayne, let's talk a little bit about, first of all, the grains in general. We did see a little bit of a pop, but how much of it was just some short covering and positioning heading into the big report tomorrow?
I'm afraid a lot of it was just short covering. Remember, the funds are massively short the corn market, and we've had a rough week so far, right? So if I sold it, last week or Sunday night on a gap opening, I'd be looking to probably take some profits here too, because the report, if there's a surprise to me, it should be a little bit bullish. They're not going to touch the yield, but they might increase old crop demand. They should increase old crop export demand. I don't know if they will. They'll probably do a lot of nothing burger here, but I think that's why we rallied a little bit today.
Yeah. So when we talk about demand being changed, exports were really good this morning on corn. We're running well ahead of last year's pace, aren't we?
I know. No, actually, as far as sales go, we're already exceeded USDA's forecast, and we got 2 months left in the marketing year. So honestly, an increase of 75 or 100 million bushels for export demand for corn would make sense. I just don't know if they do it. Maybe it's a 25 or 50 this time, and maybe they wait to make a big increase in export demand when they maybe increase the yield in a few months down the road. I could just see something like that. They like to kind of delay it and offset the two supply and demand issues like that.
Right. And you mentioned USDA won't probably adjust yield, but what size or how big of a yield is the market trading already for corn?
Well, that's almost the good news. I think we're trading something above trend. I'd say a 184 to a 186 is what the market's probably trading. Maybe we need to go down below $4, get to 395 for D's corn, find that support, and I almost find myself cheering for that to just go ahead and happen, because I don't really like selling the market or hedging the market here. So I'd rather just get down to the low, get over with, and maybe we make a major low, like a yearly or 2-year low in the corn market here in the upcoming weeks, and then funds will slowly reverse and go the other way. At least that's sure the producer and me is sure hoping for that.
Yeah. Do we retest the 2024 lows here, do you think, especially if weather stays as benign as it's been or as favorable?
Well, that's kind of exactly what I'm looking at, is those lows. Like, it's starting to feel a lot like last year. We made early harvest lows, and then the funds, which I thought would never get long again, did get long by the end of the year. And maybe that's what we have happening here again. But the first thing we've got to do is get the funds to stop selling, because right now they continue to sell and it continues to work. As much as I can argue and say, I don't think the yield's a 186. I think it's still a 179 myself, just because of the fringe areas and a record amount of acres. But I can say that all I want, but if the funds are trading a larger one and they drive the market down, it's still working for them. So we need them to stop selling before I can get a bullish market.
Well, and they're not at record levels, so they could sell some more here. I'm going to talk about wheat next, because wheat and corn a lot of times trade in tandem. Today, I felt like corn got a little help from the wheat market, but was that just short covering?
I don't think it's just short covering. I actually kind of am starting to like the wheat market. We're over half done with the harvest, so the harvest pressure should be wrapping up fairly soon. And it's not a perfect crop as far as spring wheat anyway. If I'm switching gears here a little bit, Montana rated only 2% good to excellent. You want to talk about a really poor and low rated crop. And of course, that spills right into the Canadian prairies too, right? The Canadian estimate came out today. It's steady with last month. I'm a little surprised at that. I thought they would decrease a little bit. So they have some drought concern. Europe has drought concerns, but pretty close to harvest there too. So maybe it's too late to hurt the crop. But I don't know. World wheat is still tighter than it has been in recent years. So I kind of wonder if the wheat market isn't actually making a low, and maybe that's the commodity that can eventually drag us out of here. But Michelle, we don't have to rally a buck right now. It's not like export demand is that great, but I feel like the low's in.
Yeah. Maybe we get a little bit of a surprise tomorrow, though. I know harvested acres were down quite a bit in the June 30th report. That has to be kind of worked in here, doesn't it?
Well, I think so. Now, the spring wheat crop in my area, Northeast South Dakota, looks better than the poor ratings we've been getting. So I have mixed reactions to it. I mean, I think it's an okay crop, but remember, acres are down to like, what, a 54-year low. So we still don't have this huge production in the U.S.
Right. All right. Soybeans saw a little bit of a bounce today, but we've had pressure all week. And really, let's talk about maybe tariffs and trade concerns weighing on the market? And do you think soybeans have also been disappointed that we didn't get a China deal from the president last Thursday?
100%. I mean, what a flip from a week ago. Last Thursday we go into the holiday. I was excited. The trade was excited that Trump was going to have this announcement in Iowa, right? And the details were that it was going to be a deal with China, and he was going to have in the speech details about how much soybeans they were going to buy. And I kind of went into the weekend thinking maybe I should be long soybeans. Luckily, I didn't, and because we didn't get that at all. And now this week, it feels like we're right back in a trade war with China. And I thought we had this kind of agreement in principle with them, but evidently nothing was down on paper, because now it feels like we're back to fighting with them, comments back and forth. So now I've gone from thinking the trade war is over to maybe it's back on again. And I think the soybean market is feeling that way too. We broke through some support I was watching on the November chart this week. Now we closed just back above it today, but I'm afraid we're looking at trying to test that 975 contract low now, because remember, the funds are long a little bit of soybeans, at least they were before this week. They have plenty of room to flip and sell and go short for a little while here in the short term, especially while the weather is this perfect.
Well, and it's not just China. We have other trade concerns that have come up this week. 25% tariffs on Japan, on South Korea, mixed Brazil in there. I mean, there's a lot of tariff concerns and uncertainty going on, right?
Yeah, 100%. It's headline every other hour, it seems like, on that. And none of it really seems to be good. And we talked before a little bit about the rumors that when we do finally get these trade deals, what does it mean? Does it really mean anything for ag? And I don't really think it does, Michelle, other than the fact that it just ends the trade war. And that's about the best we're going to get. We're not going to get countries to say that they'll come in and buy all of our soybeans or all of our corn. That just won't happen. It's a supply and demand driven market. But so yeah, the whole trade war thing is just disappointing. I just kind of want it all over with.
Yeah, but just a little short covering again there today, you think?
Yeah, I think so. I'm sorry. It's just a little short covering, big report tomorrow, and then we go from there back to trade and weather.
Okay, well, hopefully we can hold the $10 mark. We do have lower acres. We do have, at least biofuels demand, maybe a few things to hang our hat on there. So.
Yeah, well, actually, I might sell some more soybeans here for producers, maybe even do what I would call some panic selling, because we didn't get the hedges on we wanted to this spring. So if we get a little pop during the report tomorrow, maybe sell that somewhat aggressively on the board. I don't want to do cash sales here. If we go down and test that 975, Michelle, then I want out of hedges again. And that's why I don't want to make cash sales either, because long term, I don't think it's a great price. And to your point, it's still a very tight supply in the US. So I think we could rally come fall.
All right, let's talk about this cattle market. We threw a lot of bullish news at the market today with the Brazil import tariffs. We also are closing the border again to Mexican imports, yet live cattle closed mixed. Are you disappointed with that action or concerned about it?
I think I felt every emotion while watching the cattle market today. I mean, sharply gap open, looked great, higher. Here we go, close the border again. And I had guys ask me, when do you think the border gets opened again? And I can't answer that. I mean, now the screw worm is even closer to the US border. So I would think we want to keep it closed for a while. But the market flipped and went the other way midday. And I know I read an article from Drovers, and I'm sure a lot of other people did too. It was interviewing, I think, 3 different veterinarians that talked about screwworm and dealing with it in Panama. And it's not a great article to read if you like the cattle market. It talks about how disgusting it can be, and you'll smell it before you see it. And everyone can go read it for themselves. But it just kind of made me think, like, man, if we do get that in the US sometime, it's going to be bad for the market and could be lock limit for days. I know there's other brokers out there that say it'd be a bullish thing because it means less cattle, but it's just, you can't have something that's called a flesh-eating worm in any meat and think it's a bullish thing. So that concerns me. And I wonder if that didn't concern the market a little bit today, Michelle, because like you said, we were up so sharply, and then to close down 55 cents, a key reversal in August fats, box beef down at midday too, again, after down hard yesterday. I'm not saying it's a top, but it does act like a top. But I guess I've called the top so many times, I feel embarrassed to call it a top again, but it does act that way.
Yeah, I know. We haven't had any major cash trade development, though. And so if we get higher, steady to higher cash trade, I think that could negate that probably, couldn't it?
Oh, 100%. That's what happened last week, right? This
Right.
market looked like it had topped, and then cash market traded higher. So yeah,
For sure. All right, the hog market we know has come well off of its contract highs, but we have the funds who are still, I think, nearly record long in that market, and you have cash and cutout values, which have been kind of slowly easing seasonally. So where does the market go now?
I think probably a lot of sideways would be my guess. I think cash and cutouts are starting to bottom here, which isn't the seasonal tendency. They should keep going lower, but I think because of how high box beef prices are, I think cash and cutouts in the pork complex can bottom a little bit sooner here around this 107 mark on the cash side of things. But I don't feel like we have to rally a lot, but I did love seeing China come in as the largest buyer of our pork in today's export sales report. So maybe that'll help put a bottom in the market. But I also don't know if we have to go flying right back up to the highs. So sorry, I'm being a typical broker and saying just a sideways pattern in lean hogs.
All right, thanks so much. DuWayne Bosse with Bolt Marketing. That is Markets Now.